Hi, let's talk about another important key term related to financial accounting, which is equity. Equity actually representing the value that would be returned to the shareholders. So, who are the shareholders? Those who invested the money in the organization. Those who invested the money in the organization, once, say, for example, if the assets were liquidated and all the company debts were paid off, whatever the money is left over, that is the shareholders' money. So they have assets, they have liabilities, whatever they will take out from the assets in terms of the liabilities, whatever is left over would be the shareholders' part. That will be their equity. Now, this equity could represent their overall stake in the company, and that's what we can see in the balance sheet also. Now, calculation is pretty much simple. We just have the equity is basically the total assets minus the total liabilities. Now, this particular equity would be calculated in terms of the number of shares that each shareholder holds and what is the value of each share today. If there is any retained earning, it means any of the earning that has been made by the organization in a particular financial year, they have some kind of a retained profit which they can use for expansion of the network. That will also be considered in equity part. Again, if there is any kind of dividend which needs to be paid to the shareholders, maybe at the end of the year, that would be taken out from the equity part. So example would look like in this case, um, would be something like this. If the company is having different shareholders, they have overall number of shares. What is the value of that share? It gives them the overall, the common stock value, which is $4 billion. Then they have certain retained earnings in terms of whatever they have taken from the profit to be reinvested. That is the money they have kept to be reinvested. But they might have done some kind of payback to the shareholders in terms of dividends. So here, say for example, zero point 0.4 billion out of $2.45 billion have been given back to the shareholders in a particular year. Now the total equity in this case would be 4 billion plus 2.1 billion, which is $6.1 billion is the overall equity of the shareholders. And when we compare it with the assets and the liabilities, you will see that the assets minus liability would come out to be exactly $6.1 billion. And we'll look into the calculation going forward in the balance sheet. But so far, it is just for the broader understanding of these key terms related to financial accounting.